This is John Paulamy of the Actionable Intelligence Alert. Today is Sunday, April 29th, 2018. And I want to make a short video today, just do a little market review. Not much to talk about, but there were a few newsworthy items from last week that I wanted to go over. And the first one was the Cameco conference call. And I took a few notes during the conference call, listened to it. If you're in the uranium space and you're a uranium investor, I definitely encourage you to listen to the conference call because the management is probably the most plugged in that you're going to be able to have access to regarding the uranium market and where things are going. In addition, there was quite a good spread of analyst questions, and I was able to glean a few tidbits that I found very encouraging. I think one of the first things that I pulled out of the conference call was the CEO's comments that Cameco is cautiously more optimistic regarding the uranium market. And that's kind of a big change from the last conference calls that we've heard in the past, where they were pretty negative and were kind of highlighting a lot of the negatives. The general tone of this conference call was that they were putting more, in my opinion, more of a positive spin, a less bad spin on things, and almost like a green shoots type thing, like spring has come to this market. They weren't, now don't get me wrong, they weren't bullish, but they were cautiously optimistic, so that's good stuff. One of the other things that they said was they reiterated the fact that they do not see the logic in turning McArthur River and Key Lake back online at these current uranium prices. They said there were several questions about it, and they were pretty straightforward in their responses that they are not going to mine the crown jewels of this low-cost uranium that they have and try to sell at these low prices. They said that they would go into the market and buy uranium at $20, $22 a pound and use their stockpiles to fulfill customer requirements. Now, the thing about it is they were asked by some other analysts, well, what does that really mean? Have you been in the market? And they said they've been putting feelers out. So I don't think that they've really entered in a big way yet, but they are probing the lines, if you will. So I think over the next quarter, we'll see a pickup in that. And I think next quarter's conference call will be very, very instructive as they are able to probably be able to speak more and have more information about what the real market out there looks like in the spot market. So I thought that was pretty positive, and we have that to look forward to. The CEO also said that there's definitely not enough investment in new uranium production because of this low price. I mean, what they say right on their conference call slide deck is supply is not incentivized. And that's what I've been saying for a long time. And that's why I'm so bullish on this sector. The normal price discovery model was interrupted by the Fukushima accident. When you basically took all those reactors offline and the price crashed, it was kind of an abnormal situation in the uranium market. I mean, prior to the Fukushima accident, uranium prices were kind of trying to find that supply-demand balance, and you're around that $65, $70 price, which would be an incentive price to incentivize capital to come into the market and build new mines. But that was completely short-circuited over 7 years ago when we had this accident, and we basically, in my mind, these are artificial prices as far as incentivizing new mine development. So you have this huge gap in time that's been wasted, or not wasted, but this huge gap in time where no new mines are really being developed. And we know the timeline for new mine development being 10 years or more. I mean, guys, it's just a matter of time before we have a supply crunch in this market. I actually had some comments on the previous YouTube videos about uranium, and some guys were like, well, the price will never exceed the old high. I think it's definitely going to exceed the old high. We have continued reactor development, continued reactor commissionings, and we have 6-7 years of no adequate price signals to capital to build new uranium mines. There's a big supply gap developing, not in the next year or two, but out out down the line, 5, 7, 10 years from now, there's gonna be a huge supply gap in uranium. So I think the CEO was speaking to that. He would know better than anybody. Cameco management reiterated that nuclear is still a growth industry. They had a slide up about the number of reactors that are currently being built around the world, which is around 55. So I think you can take from this conference call some positives. Obviously, we're still bouncing around the bottom here. No one really knows what's going on, completely. There's a lot of speculation. And I'm not one of these people that sits here and, frets over these things. This is just an inevitability, guys. I mean, watch the hockey playoffs, baseball season starting, get your positions on, and just sit back and wait. That's all you need to do. You don't need to be fretting over every piece of news and trying to forecast when the uranium market's going to turn around. It's inevitable it's going to turn around, and it's going to go higher. So my suggestion, as it has been before, if you are a novice or more conservative investor, I would just buy a stock like Cameco or maybe your Uranium Participation Corporation, which is physical uranium. That will allow you to sleep at night. I mean, Cameco actually made a net operating profit this quarter, so they are fully cashed up. There's no danger of anything bad happening. Now they do have a lawsuit going on with the government of Canada about some back taxes, but I think that's going to resolve probably in Cameco's favor, or at least some type of settlement that won't be too cumbersome to Cameco. But I think if you're going to get into Cameco, you need to research that a little bit so you're comfortable with it. And they did speak about that on the conference call. But if you're a conservative guy and you see this, you just don't want to worry about it, just buy Uranium Participation Corp. You're buying physical uranium, or buy Cameco. I mean, during the last bull market, I mean, we showed the chart last week of how much Cameco went up during the last uranium bull market. If you're more speculative, then you need to do a little bit of research and understand what you're comfortable with, because most of these other companies that are juniors or explorers, they don't have any, we've said it before, they don't have any revenue, so you need to be careful with them and understand their cash positions. Because, like I said, we have no idea when this thing's going to turn around, and even when it does, they're still explorers and they still don't have any revenue. So it's going to be a lot of speculation that's going to push them higher. The wave of money that's going to come into this is what's going to push those higher. So those are the two tracks I would take, but I still am. This is the best setup ever in my career, and this could make your career if you get this right. So I don't like to be too much hyperbole, but I mean it's setting up nicely, and I think we're starting to see even people in the industry now, like Cameco, they have to be conservative. They're the big player. They're not going to ever get too crazy in some of their comments, but even now you're seeing that they're getting more optimistic. So wanted to cover that. I encourage you to listen to that conference call. I thought it was pretty good. Going into the oil market now, this is all basically supply and demand and inventories. Inventories in the last week were up a little bit, but overall the trend is still down, drawdown in inventories worldwide. I did listen to the ENSCO conference call. With the exception of their jackup business in the North Sea and the Middle East, it's still pretty weak. I expect ENSCO stock to pull back over the next few weeks, month or so, because the large oil companies are still not committing to multi-year, multi-billion-dollar, huge offshore field developments. Now that will come eventually, but we need to see a sustained high price before those managements and those boards are going to commit to like companies like Chevron, Shell, Exxon, the big international oil companies, Total, BP, before they are willing to commit to multi-year, multi-billion-dollar deep water investments. They're going to have to see a sustained oil price for some period of time, but it will come. I mean, the cycle is what it is, and I don't think it will be different this time. Of course, barring any type of psychotic break in the markets or some 2008 type worldwide economic collapse, I think the oil price is going higher. I think we're going over $100 a barrel. I've said that before, maybe late this year or early next year. I think it's inevitable. And I think there's some things out there that are not necessarily taken into account, but we are starting to see perceptions change in the market. We're starting to see more and more analysts come out and start to get off the lower for longer and starting to understand that these inventories that are declining and the demand growth around the world has been underestimated, and that is going to result in a higher oil price. So, one thing like Shell did say in their conference call that they will be adding more opportunities in the offshore sector, which is positive. But we need to see more of the big international oil companies and state-owned oil companies like Petrobras, and the state-owned company in Angola and in Norway, Statoil, announce more long-term projects offshore, and that will happen as long as the price stays up for a period of time, and they get confidence that that will be they'll be able to get a decent return on those investments. We're coming up to Memorial Day. That's the beginning of the summer driving season. I think gasoline demand is going to be very high here in the U.S. I think you're going to see the draws on inventory get pulled down even further on your inventories. I still think that we're going to see very high prices for gasoline by the end of this summer. And that's going to help to move to change perception. One of the things that if you're bullish on oil, you really need to be following the situation in Venezuela. I mean, Venezuela oil production is literally now in free fall. It's literally collapsing. I'll show a chart here in a minute. And we just saw last week where 2 Chevron executives were put in jail down there and accused of treason because they wouldn't sign a no-bid contract with the state oil company. This is going to exacerbate the situation, the collapse in the production in Venezuela, and also here, and going to contribute possibly to higher gasoline prices in the U.S. I mean, all this oil production that's coming out of the Permian and some of these other shale plays is basically being exported. Most of the refineries along the Gulf Coast refined this Venezuelan and Mexican heavier sour crudes, and they are running up against the max on the light crudes that they can refine from the Permian. So it will be interesting as you see gasoline prices going up, but yet oil production in the United States making new highs. And I don't think it's just a lack of understanding of how the entire holistic oil market in the United States and the world works. People just think, well, the Permian will just add another, million or million and a half barrels a day of production and all the problems will go away. They don't understand the different grades of crude, pipeline constraints, labor restraints, frac sand restraints, all these different things that are going on. I mean, just the amount of roads out there. There's not enough highway to get all the trucks around out there. People don't understand these nuances that all contribute to bottlenecks that create a higher oil price. And then another wild card that's out there is May 12th is the president talking about reimposing possibly sanctions on Iran, which could mean 1 million barrels of Iranian crude taken off the market. I don't think that's going to happen. What I think is going to happen is the president will announce that he's not happy with the nuclear deal. There'll be some other sanctions, but I can't see him coming into a congressional election in November, causing 1 million barrels of crude to come off, and then having to explain that when gasoline prices soar in the United States. I mean, crude is a worldwide fungible market, and we're already seeing inventories being drawn down and demand soaring around the world. And for the Trump administration to go out and cause another 1 million barrels of crude to be taken off right before a congressional election that looks like Republicans are going to lose a bunch of seats anyways, doesn't strike me as something that the president, I think he's smarter than that. But we'll see. I mean, it's a wild card. Obviously, if they do reimpose sanctions and take that level of crude offline, you can definitely will see a higher oil price. So here's the chart I wanted to show about Venezuela oil production. Obviously, the orange line to the left is the oil production. You see it here since July, basically last summer. It's been in free-for-all basically since 2014, January, but it's really taken, I mean, the collapse has really been more pronounced since last summer, and it's almost straight down now. So we're rapidly getting to the 1.5 million barrels a day, and I've seen some forecasts that this could end up dropping less than 1 million barrels a day, and that would just be a complete disaster for the country and for the world oil markets. I mean, I just don't understand how all this is going to get replaced. And this isn't the only country around the world that is struggling to maintain production. Obviously, throwing international oil company executives in jail does not send a message that you are willing to work collaboratively to the other oil companies. And in fact, we've seen Schlumberger and Halliburton, two oil services companies, actually have pulled out of the country and written off their businesses there. So even if you wanted to turn this around, it would take years and billions of dollars and a complete change in the government and attitude. So this is just going to be a disaster. I don't know what's going to end up happening here. I think Maduro is eventually going to get overthrown. But I mean, not only do you have production declining, the country doesn't have the requisite foreign currency exchange to buy dilutants to mix with this crude so that they can ship it out of the country. They actually have to import dilutants from the United States to mix with this heavy crude such that it will be able to be used in a refinery. So that's another issue. So something to keep, these are things that don't necessarily get talked about in the mainstream, but they are things to watch. And these are things that we've talked about many times before, that trying to look at things holistically and in totality. I think that's the difference between our methodology and what the average person is looking at. I mean, there's a lot of people out there that just look at the different information pieces, but they aren't able to stitch them together into a workable thesis that they can actually deploy money on. I mean, that kind of sounds long-winded, but that's basically what I think the advantage of actionable intelligence is that we are able to take all these information sources and kind of stitch them together and create a picture that makes sense. I mean, no one's going to get it 100% right all the time. You're not going to get all the information sources correct. I mean, it's like a fire hose of information, but I think we do a good job of looking at the overall picture and creating a sensible, workable thesis. So if you're interested in this type of investing methodology, we've got the newsletter, actionableintelligencealert.com/subscribe. It's $79 a year, and we've been growing the subscription base, and we are 4 months into it, and have had 3 stock picks with another one coming out in early May. So if you're interested in understanding that or seeing what we're looking at for high upside to take advantage of these situations, I encourage you to take a look at that. That's it for this week, guys. Appreciate you listening. We'll talk to you next week.